everyone? Welcome to the stream. Yes, we're starting a little early today. Thank you for joining us and getting ready to discuss these markets because boy, oh boy, have they been volatile. But have we just hit the support ahead of the Fed? We'll be discussing that more, obviously going through all the markets, stock, commodities, and crypto a little bit later on. Guys, it's been a big volatile day. Let's just quickly put things in perspective here of how volatile some of these markets have been. Let's go through the Nasdaq, a big swing of 6% in a day. Sorry, not that big, but pretty close. I think it was about 6. Let's have a look. Yep, 6% it was. So big swings here, 14,000, slightly breached for the session and then completely reversed. And the same kind of thing on the S&P 500, 4,300 reached. Now, we think that 4,300, or this makes sense for it to be a level that we sit at ahead of the FOMC or the Fed announcement. Reason why? It's the big support from the previous point. It's also one of those areas of huge put buying. So I think that's going to be one of the discussions we have today. Did we just see an incredible amount of puts get put into the market, as in like they've been opened and they are in there? We haven't got the full number of the PCC yet, but I'm going to assume that's probably going to be quite a high number, somewhere around these 126s, 129s as of the close. That's going to mean that a lot of people are going net bearish on it into the announcement. Now, we've been talking about this discussion for a while. Is it a sell the rumor, buy the fact? Okay, so let's have a look here. And I think it's important to do this at some of the things that we know about the market and some of the things that people are starting to freak out about the market. At this stage, do we even know anything? We know that they're probably going to raise interest rates. Now, we know that there's going to be a certain amount of interest rates risen. But if you think about it, is this even about interest rates anymore? 0.989. The US 2-year is actually moving down. Let's have a look at the 10-year. The 10-year sitting at 1.723. If you were to look at this on a chart, does that exactly look bullish to you in terms of the 10-year, the 2-year are actually rising? The answer is no. Let's also look at another couple of stats here. And I want to go through some of the big stocks, the ones that are heavily weighted in the market. Microsoft trading at 287 was as low as 276. The question then becomes, is this stock a ripoff? Is it deserving of its price? So I'm going to ask the community, do you think that Microsoft deserves its expensive price? Yes or no? Let me know right now. Yeah, they claim 4 rate rises this year, so I understand that. But even at this stage, the 2-year is actually saying less than 4. So Finken says yes. No, people say. Well, I think there is valid reasons to say yes in some ways. So if you actually look at the growth here of earnings per share for Microsoft, especially since the pandemic, we need to understand that this stock has gone from $5.76 or what $5.99 kind of area around here upwards of $8.95 in terms of EPS. So does it deserve some kind of massive increase? The answer is, again, in my opinion, yes. And this is across the board in most of these large stocks. If you look at Facebook or Meta platforms, if you look at any of these major stocks, we're talking top FANG stocks. Google, what's happened with that? Now, if we look at Alphabet and we think about its earnings, the reality is the stock has literally doubled in its earnings per share. I mean, it's gone $58 to $103. So again, does it deserve to double in price? Well, by the old metrics, you would think so. In fact, the ratio has remained relatively stable in terms of PE ratios. So I think that we need to go and we need to say, okay, what is the big heavy weightings in the market right now? Are we feeling scared for no apparent reason? Remember, these are the biggest stocks. So let's just have a look at the SP 500 company weightings. All right, we're going to bring that up right now together. Let's have a look at this. Here it is. And we're going to bring this onto the screen. And it looks like we've got some weightings here. So these are the percentage weights in the market in terms of overall weighting. So we got 6.79 driven by Apple, obviously a huge component. We've got Microsoft driving 6. We've got Amazon driving 3.34. We've got Alphabet driving 2.1, Tesla driving 2, the other Alphabet component driving 2, and then Meta driving 2. So between, really upwards of NVIDIA pretty much to Apple, we've got a large portion of the market. And if we actually calculate this together, let's just quickly do this. So we've got 6.8, let's call it, plus 6 plus Amazon, so 3.34. It's a very similar kind of thing, plus 4 for both those. And then we'll go with, we have to ignore Tesla because obviously it's its own valuation. And maybe we'll go with NVIDIA. Well, it doesn't really matter. We've already got a huge portion. So let's consider that we believe these companies aren't overpriced fundamentally. This is fundamentals. This is not technicals. And I understand that we talk about, mostly technicals here on the channel, but I think we need to put this in perspective. Is it a ripoff? Yes or no? What do you guys think? Based on those figures, based on where we're sitting, we've got 100% growth and we've got around 100% price increase. Valuations, very similar in terms of ratios in some ways. What do you guys think? And a lot of these companies have entered into growth components on their markets. Dr. Will X SGD 1498. Thank you very much, Dr. Will. Technical picture-wise, how can the market bounce? Doesn't look like it can crash more. Looking at the double trigger for Tesla in 2 days. Yes, Dr. Will, we'll look at that in just a second. So thank you very much for the donation there, and we will check it all out. Gary says, Tom, drawing a fib retracement from the 2020 SEP lows to 2022 highs, we did almost hit the 38.2. All right, well, let's go back over to the markets. I know you guys here are mostly for the technical analysis components, but I still think that it's pretty important for us to think about those top stocks, break down the basic fundamentals concept, and then say, well, should we be scared based on the fact that we haven't even seen the Fed do anything yet? Remember that, guys. That's how irrational the market can be sometimes when it's fearful of uncertainty. Let's put this in perspective. Have we seen a big bank crash? No. Have we seen some kind of epic black swan event in the markets that's causing this sell-off? No. We are literally selling a rumor of 4 rate hikes and Jamie Dimon 7 rate hikes, and this idea that inflation is going to be persistent. And we're already down 20% on the Nasdaq. Wow. Yeah? Wow. So you said, is it a rip-off? Okay, so I probably shouldn't use slang. So is it expensive for those NASDAQ stocks? The answer for me is I don't believe it is as expensive as other people think. So the valuation is not as extreme as maybe some people think on the big stocks, the most important stocks to the fundamentals of the market. Okay, those tech stocks all did better. Now, there is one caveat to that. Does anyone know what the biggest problem could be when you're looking at current valuations and you're saying, okay, yeah, I get what you're saying. This pullback had to happen. We knew it was going to happen, but we think that we're getting closer to a fair price. What's the big problem with tech stocks and that type of model? Snoozer says the big stocks have always been expensive. Yes, they have. So we're sitting at a 23.6 at the 14,400. This is for the Nasdaq, and we just hit 14,000 flat. And this is the kind of zone that we were hoping to get to ahead of the Fed. So this is exactly where we want to be. We went a little bit lower, admittedly. I didn't know it was going to go underneath 14,000, but that's enough to wipe out many people's positions. I hope you weren't wiped out today. Let's look at the US 500 here to put it in perspective. US 500, we'll do a fib of the major pull here in terms of the lows to now. And when we get a fib retracement of this, usually in most pullbacks, you get back to a fib in itself. So we basically hit it 4,200 to 23.6. If you notice, if you go kind of these top to bottoms in other pulls, let's say this one here, you often do get to a 38.2 fib. So a 38.2 fib would pull us back all the way to 3,800, which is our worst case scenario for this year, should it occur. Again, that will actually need some kind of real facts. I don't think it's going to be easy for the market to get underneath that zone. So yes, we expect the 4,300 to rally. This is around the zone that we expected to be at ahead of the Fed. We are here. Now what happens? Do we finally see a bullish buying zone? We've now seen what? 1, 2, 3, 4, 5, 6. That's 6 bearish days in a row. It's getting close to being kind of rare for it not to have a buy up zone. So let's just go back and count over here. 1, 2, 3, 4, 5, 6 buy up. Okay. Very tough for the market to continue bearish like this pace, especially when we don't even have any information. 4,300 reached, 4,200 almost reached, and buys directly off that zone. Goes too low, takes out hunts that will be underneath here, causes maximum pain, closes somewhere around here. What's your opinion on the next session, guys? Do you think that the next market session is going to be bullish or bearish? Let me know in the comments. Tag says the sell-off is because of the Russia-Ukraine conflict brewing. I don't quite believe that necessarily. Greg Hartman says, Tom, I'm concerned about the Russia situation. That's fair enough, but there's been plenty of these situations before. Maybe not the exact same way, but I don't think that's a big enough one. I understand that the idea of the word, we'll just say it, war, whatever. I don't know if I get demonetized for that, is the big issue here for markets, but generally it depends on the countries that it's against. Okay. Now, I'm not saying that it's not a big deal. I don't want to get into it. We're just talking about the market side of things. But realistically, the other conflicts that could occur are much more susceptible to causing massive market crashes. This is a mixture of just negative sentiment, concerns on growth, inflation, interest rates, and of course, probably a bit of that will be smattered in with the situation in the Ukraine. But are those tech stocks expensive? They seem to be around the right area. Snoozer says Pelosi's husband just bought Google Calls. Well, there you go. So Dr. Will asks, technical picture-wise, how can the market bounce? It doesn't look like it can crash more, looking at the double trigger for Tesla in 2 days. Okay, so we'll move over to Tesla in just a second here, but I do want to understand what everybody said about the market. So most people are thinking bounce green, but don't know if SPY recovers the 200 EMA. Yep, that's a fair kind of concept that you're trying to get it back to. I'm not sure if you recover to the 44.40, but the idea of a bounce does make sense. The volume is up. The fear would be incredibly high here coming into the event, and therefore it's the perfect place for them to create a rally. And you'll notice here the Nasdaq's just rallied another 100 points. The US 500's rallying off the 4,300. And this is the area that we expect for there to be a little bit of a trap. This is where you expect that dead cat bounce potential and then a turnaround story or something like that. And I'm not saying that I think we're going, whoa, yeah, V-shape, let's go all the way to the top. I have a feeling that that might be done for now, and we move into a sideways market here until we get maybe some further clarity coming into March and April. Now, what's the Fed most likely going to say? They're going to say something like March, maybe something like that. Therefore, we'll have instability until the fact occurs. And what do we know about statistics and everything that's been going on with the seasonals? If we think about the seasonals and statistics, we have highly volatile times coming into March, and we have sideways action often on the growth stocks coming into April. So we have that Feb into March potential weakness. I think that's something that's very important. And we need to, again, look at these types of things. Let's move over to Tesla here because Dr. Will wanted to ask a question about it. Tesla just came off heavy support. I mean, this is it. This is the trend line. There's our trend line. We've used that in the past very effectively. I haven't changed anything, so it's exactly where it hit. It got as low as $860, and it's now rallied to $891. So it's going to probably close around that $900-ish mark, somewhere around here. Makes sense, $890, $900. And we've just hit effectively the support coming into the big earnings result. So we're about to see earnings. Earnings will be the trigger either way. And it's all about Tuesday on the close to begin this discussion, because Tuesday on the close is going to be Microsoft. Then we have Tesla on the Wednesday after the close. Then we have Apple, McDonald's, MasterCard, Visa. So many big companies coming out. So Tesla's really hitting on a massive support ahead of earnings. This is pretty much the zone where it makes or breaks. It's the fight between the bulls and the bears. So just like the SPX, hitting 4,300 is a big deal. I know it went lower, but this is where it's going to probably close around the 4,300. That's a big deal ahead of the Fed. Tesla is at the perfect level of sup should it hold. But if it breaches, you know it's going to be brutal. Okay. If it breaches, it's going to be bad, because what you're doing then is you're saying, okay, yeah, we think you're overpriced still, onwards and downwards to the next level, which could be as low as something like a 700. Just remember that. It's at support into earnings. Be careful with those types of positions. Slobodon says, tomorrow stalemate and Wednesday green. Yep, tends to make sense. Some kind of lower volatility, maybe even a dead cat bounce coming into it. And then we get that Fed kind of buy off here. We've got Gary Saini, $9.99. Tom, been sitting on this for some time. Every 20 years, we get a major bottom, 20-year cycle. Last bottom was 02, 82 before that, etc., etc. Do you follow cycles? Thank you for everything. I do follow cycles, but I follow a slightly different cycle than that cycle. So my option is usually not to go with that one in particular. I generally go with a different cycle, and that cycle is based around a totally different asset class. So 20 years, 02, obviously the bottom of after the tech wreck. The problem here is, and I think a lot of people are drawing this 1929 scenario, is that in 1929, just because obviously you're talking about, currently you're saying a market's going to happen with the low in 02 in 2022. The problem with that is that we're at still close to peaks. So even with 10% down or 16, 18% down the Nasdaq, we're still at very high peaks. So you're basically talking about a 1929 into a new peak into a crash scenario. That's the only other time it's ever happened on the S&P 500. Issue is this time we still have stimulus. So if everyone thinks the stimulus is getting taken away, it's still there. It's just being reduced. Okay. So we still have that. Plus we have government expenditure across the world. And I think this is very important. The thing about government expenditure is people think it's just like this, and then the sugar rush is gone. Most infrastructure projects have slight bounces in the way that they release cash over time. So they tend to be more long-winded. They tend to have that length in them. And I think that's important. There is still stimulus out there in the economies. Everyone just talks about the checks, and they don't talk about the length of which the stimulus sits in. Plus, if you have $1 that came from the stim check and then it went over here to Coffee Dude and he gets his $1 now, and Coffee Dude then goes and buys something else from another smaller shop or another shop, and then that becomes $1, and then that dollar gets spent over here. Theoretically, it's still circulating for some period before it goes into Rich Dude's pocket over here, and Rich Dude's pocket, it doesn't come out of. So you don't really want it in the Rich Dude's pocket or the rich company's pocket. The idea is that it swirls around and creates that nice kind of growth story. So that's pretty important. Things such as $2. Can you look at BLND, hot company here in San Fran? Fair enough. So to answer Gary's process, I think it's important to have longer term cycle or cyclical concepts. The reason why is it can give you confidence. In my the private mentoring groups, which we do have one starting in February. If you're interested, you can message me. I do go through a cycle and the way that I process it, but it's a bigger discussion. It takes a bit of time, and it's not quite based on 20 years, but you know what? It's damn close. I'll say this. It's between 17 and 21 years that you usually do see some form of epic crash. And luckily for us, we're not quite even at that point just yet. Okay. Things such as, again, BLND, you're wanting to ask a question here. Very good. Also, a few people pointing out a very interesting fact today. IWM and even some hyper stocks not actually feeling the brunt of the market. Now, we've been talking about SPLK being a base case scenario, as in like it's been forming a nice support. Look at this running here. 119.89. SPLK up 4% in what looks like a brutalized market day. This is a sell-off, no doubt. But they are selling off hyper stocks. They are selling off certain stocks that they're pressuring, and other stocks that have come down, like DKS. It's another one, Dick's Sporting Groups. We've had here a great support on it. And guess what? It's coming back up to the resistance. So not every stock across the board is down heavily. But the big mega caps are getting beaten. And we've also got the hyper stocks that are finding what we believe could be some kind of base. And a lot of this has got to do with IWM rallying here at the low. Can we have a look at BLND? Hot company here in San Fran. All right, BLND. Blend Labs. Internet services company, supposedly. IPO'd around one and a bit, or not even a year ago yet. So it's typical of all of these US IPOs. They go down. Hood, space, doesn't really matter. They all tend to turn out pretty terrible and they form bases. This is correct for an accumulation low. What you'll notice a few things here. Let's go to the daily for a second. You'll notice that there has been an increased volume down here in the low. So the good news is for you is that there's activity. So someone is buying and selling down here and possibly accumulating at this cheaper price. You have a resistance that's going to come through that 780. So around that 780, you want to close above there, and you've got a really nice support with 3 wick purchases. Long leg doji, you see that kind of buying coming off, the wick that's come back down to it, buying coming off, and again, the wick. The story is good. The base looks better. The volume is improving. So if this is a stock that you really believe in fundamentally, this is the type of support that you would like to see. Thank you very much for the donation, and good luck with it. But from a technical standpoint, yes. Snoozer just says, just look at Piton, pins, and CRNC. So Piton up 8.76. Yep. Pins, interest, $30. Finally up here for a session. Yeah, these stocks are starting to get cheap. I'm not as negative as everybody else is on the markets. I understand that people are saying, and this is the great thing about narratives. Have you seen how fast everybody switched from going from long-term bullish, okay? So everyone was long-term bullish. Then in a few weeks, we've gone bearish, no doubt. We've sold off. We've sold to the 50 exponential moving average on the weekly, all and the S&P 500, all these things. But people's long-term bullish scenario has now turned bearish into economic disaster, okay? And then they've gone from economic disaster even further into calling it, literally a recession. And I don't think we're there yet, okay? We're not at that point. Will we get there? Yeah, I've talked about how I think what the Fed's done is they've blown the money system out backwards. Basically, eventually we will hit an epic collapse in world economies. But I don't think that is right yet. It doesn't make sense. Things such as $5. Thank you. You should invest. Ha ha. Okay. Thank you very much, sir. Appreciate that. David Taylor says, how about looking at AGL, Tom, and healthcare? Yeah. I mean, all these sectors are good. AGL, for anyone that doesn't know, who've been coming to our webinars, you would know that this is a stock that we've been looking at in recovery phase. This is one of those ones where if you can pick the bottom, which has taken a very long time, obviously, to get to, you can really see the recovery is here. Now, this is Australian stock, so don't worry about it too much. Look, it just hit our resistance and it's floating on down. I expect it to float down and then have a turnaround later on. It will be like a big head and shoulders, says GOG2. So I agree with that. It's going to be a very interesting thing. Now, Gog is getting at this, and I'm assuming this is what he's doing. So he's basically going with dead cat bounce, market rally. So we've got here left shoulder, got here head. We come down, we cause another dead cat. Look at the dead cat bounce. We'll do this in the video today because I absolutely agree with you. I was discussing this with Ulrich as well, or saw his post on this, and I agree. And then you got the right shoulder, and then you'd have a massive neckline. Now, if this is the scenario and we breach it, okay, we better pay attention. And I mean really pay attention, because at that point, we will have the Fed message. We will have consideration in the market, which is a big part of why these patterns are something you should be paying attention to. It's all about consideration. So what's the market really done? It's formed some form of left shoulder, which obviously is just a pull back into the upward trend, but then it's tried to rally and failed. That's the important component. It's tried to rally and failed. So this is something of a scenario. And when you're playing with the market, when you're playing with this concept of what happens next, this is the type of thing that we look at. You can see this rally here coming through, guys. All of a sudden, US 500 only down 1%. US 100 down less than 1%. Look how big this rally is. Look at this. Creating almost a bullish hammer here. And this is on the SPX. This isn't even on the Nasdaq. I mean, sorry, on the futures market. It isn't even on the futures market. So if we go over to the Nasdaq, it's a very similar thing. Bullish style hammers coming off the base that we discussed. Yes, it went a little bit lower because, of course, the market loves creating max pain. But this is exactly the scenario we've been talking about. The Fed comes out, it gives clarity to the market. Then, of course, all bets are off. But most likely, they do not want to crash it. Slobodon says this is exactly how the Big Depression played out, Tom. Was there support of the economies during that time? So you're talking about 1929. I understand. Crash caused in that period. Then the market went off on a new level, created a new gain, and then, of course, epically collapsed, which was, that 50 to 80%, even 90% probably in some positions, and we moved down. The issue with that comparison I have is that we still have stim packs in the market. They didn't do that back in the day. They didn't create stimulus like they've done this time around. They didn't create, and the stimulus is still there, even if people think it isn't. According to that big head and shoulders, then the stop is 3,800. If you put the big head and shoulders in and you took the full distance, it'd be worse than that, I'd say. So let's grab that. There it is. Oh, no, you're right, 3,800. So that's actually our second case scenario. Yeah. Yep. All right, cool. It would proof incredibly well to the exact level that you'd want it to be at as well. So have a look. Yeah, amazing. Exactly onto a bear market start, which basically is usually where you find heavy, heavy, heavy buying. We've seen a few 20% over the last decade, and none of them have been at those points. Thank you very much to the 730 people that are joining us. We're still a little bit early here, of course, in terms of our normal opening time. So I do appreciate you jumping in and coming over here. Thoughts on the market reaction if Putin wants another puppet in the Ukraine kind of thing? I think the market will usually do what it always does, which is initially sell off. However, I think the market's become pretty efficient at figuring out the whole whether it's really big deal or not. And I'm not saying it's not a big deal for the people there. I'm just saying it's usually that's the way that kind of it should be approached from not necessarily the biggest negative to the market. Laurie says we are years away from a recession or depression. I tend to agree. I still think that's going to be a while away. Tian Shao says no way 1929 lol. Fed will do everything to prevent that. I agree. The real crash will only come from one market. Again, it's all about can you stabilize fear and greed? And if you can stabilize fear, which they've done, because obviously they've created a lot of greed in the markets here, and this time around, they'll be able to stabilize it again, in my opinion. This is in their control. It's in their wheelhouse to a degree. Remember, we look for black swan events for true crashes. This is not, it's not in their best interest to crash the markets, guys. Remember the Fed. This is how the narrative starts. It is not in their best interest to destroy the economy. Jason says, Tom, can you have a look at shop? That bounce is 18%. What, today? Really? Let's have a look here. Oh, wow. It was too. So from top to bottom, it fell down 18%. That's the type of volatility we want, guys, to get the bottom in for at least the initial. This is the type of thing you want to see. Markets that are trying to reprice themselves within the same session. Look, shot again, all max pain, all max pain. A lot of people with supports here. I'm sorry if people got hit. Look, falling knife comes straight into this 900 support, dumps straight through it, goes to 800 or 700 and something, and then rallies through after it no doubt crushes many people's margins here. Pretty brutal what they do, but yes, it's at around support, and that's another sign of, you know, the market trying to dead cat bounce here on quite a lot of stocks. And I don't think it's going to be just like, oh, V-shape, let's go party town on all these stocks. I think it's going to be like this. Quite a few months of instability. We expect sideways market action for a few months. Now, that's more of a guess. I'll admit it. It's completely a guess, but it just makes sense. We've got a lot of uncertainty till we see some facts. Someone says, yes, I lost money trading Nasdaq 100, buying and buying and buying. Yeah, unfortunately, that is going to be the story here for a lot of people. Buy the dip. Buy the dip. If you can, give us a like as well on the live stream. That would be helpful. And if anyone's interested in some free pattern cheat sheets, you can grab them by clicking the link on the right-hand side as well in the chat. I appreciate it, Terry. Thank you very much. Kunal says, just got done with a lot of buying. Fair enough. So we hit that stuff. And then Morning Dew says here, Fed is backed into a corner. They cannot continue QE without massive inflation. They will pull it back. Of course, they have to. Finken says, that's a thick hammer forming on the SPY. Yeah, absolutely. And then Her says, so many traders with emotions and hopes. That is the problem. I assume that means hopes. Yes, well, we need to, again, clarify our situation, clarify whether we're in a market crash or not. And I think the easiest way to do that is to look at that 20% weighting of the SPX to understand that actually that 20% is the one that's coming under fire right now. And that's the Apple, the Microsoft, all of those types of stocks. Are they a ripoff on current earnings? I think we answered the question of probably not. They're probably not actually a ripoff. Hypers are down hard, down to much fairer multiples. That should be considered a good thing, not if you're in them, obviously, but a good thing in terms of valuations. IWM somehow recovering today, 1.47%, while the other markets are getting beaten down still. Now, this is the scenario. We have 20% of the stocks that are not necessarily a ripoff anymore. We've got hypers that are getting back to fairer values. In fact, some of them have grown their business and they're still back at the same point pre-pandemic. Pre-pandemic, they've grown their businesses, yet they are valued at the same price. Wow. Lama says the Fed's balance sheet is still going up big. It isn't coming down. They've ruined the money system. I repeat, they have ruined the money system. The Fed's balance sheet will continue to rise. Eventually, this whole circus will crash and burn, just like it always is. It's almost ordained to do so now. Does anyone disagree with me that eventually this whole thing does, of course, explode? But the Fed's balance sheet can be way bigger, believe me. It can be bigger than you think. Does anyone agree with that? Eventually, they won't be able to support it. I mean, if interest rates were managed to get back to a 3% normalized rate or 2.5%, the Fed the government could almost not even pay back their own bonds. They wouldn't even be able to afford it anymore. At some point, there is a price to pay. Yes. And unfortunately, if you're 20, 30, 40, 50, 60, 70, and unless you're some kind of, well, even 80 possibly, and especially if you're planning to live to 100, we are all going to see it. It is going to happen in the next decade, I believe. There'll be a big price to pay, but that will be longer off. We're talking now, and you can't live in fear of every single market. So look, 4,300. It's a big support here for the S&P 500. We know that was going to be again key. It's not hard to see that we've got a key level ahead of the Fed. It's gone and caused some max pain today. We expect this rally to come through. If you want to sit on the sidelines and wait for further clarification, I don't think that is such a bad thing. There's no point in freaking out about, being in or not being in. If you were investing, we've always stuck to the same concepts. And this has been for a long time. We like the 20, and we're not going to stop liking the 20 once eventually we get above the 20. We like the 50. Okay. We like the 20. We like the 50. Just from, if you were to go say monkey ape number 1, you go and invest. And he's like, oh, which one? I want banana. And he's like, well, banana is on red line and banana is on blue line. This is not, obviously, this is just a basic concept. You guys do what you want to do. It's not a concept of me telling you exactly why or which area you should invest in. This is just an S&P 500. The facts are that it hits the 20 a lot of the times, and it hits the 50 a lot of the times, and it likes buying those zones. So the monkey would like the bananas on those levels. I'm not sure if they're going to put more stimulus into the markets, but yes, gold is still floating around. Thank you very much to 855 people joining us. Yes, the markets do look to be crashing, but just remember, guys, we've got the Fed coming out Wednesday. We've got Microsoft earnings on the Tuesday evenings. That's after the close. They are going to be the big trigger points here for everything. And a lot of the Microsoft stuff comes down to, can we continue to see growth or stabilize these points? See how Microsoft, it kind of fell heavily today here, and then it's gone straight back into our trend line coming into the earnings result. I mean, we might see some sideways action, maybe even some bounce action in the next session, but this is going to be a very important one. And always bring stuff back to, if you don't understand whether the market is cheap or not, yes, we can use technical analysis, but there's no reason why you can't go and have a little bit of a gander at things like fundamental analysis. Where has Microsoft traditionally been valued PE ratio wise? If you average the PE ratio of Microsoft out, it would sit around 30. Current rate, even at, this is Google, but let's just quickly get Microsoft up. That one's the same. All right, there we go. It should be about 30 at the moment. Yeah. So Microsoft 12 when it was doing crap. And then since it's got the Office 365 and that's been in there, you're sitting at around 20 to 30. And look at the growth curve here of the EPS. The growth curve is 100% growth since the beginning of the pandemic, and the stock price has risen accordingly. It's in effectively almost a hyper growth kind of component here. We expect this to cool. So does the rest of the market. Part of the reason why it's coming down, it'll just like grow very steadily or slower. But Microsoft is a big deal. And this earnings announcement will really prove to us in many ways whether the stock market deserves to remain high or whether it's going to get beaten down. Look to Apple, look to Microsoft, obviously look to Tesla and the Fed on Wednesday. And for anyone that doesn't know when the Fed's coming out, make sure you get your calendar out there. 2 p.m. FOMC statement, New York time, 2:30 p.m. FOMC press conference, and the federal funds rate, which we expect to remain at 0.25% at this stage. What website was that? It was Macro Trends. This website is Forex Factory, but you can get economic calendars in plenty of places. Stocks or the stock market down around 1% at this stage. Crypto market is improving. We'll have a look at that a little bit later. Bitcoin managed to get back above 36, stabilizing after hitting 33 and a little bit before. Again, just for anyone that's joining us, because I know this is a normal time, we went through some 2-year. So 2 years down under 1%. So is this really a market that's continuing to crash off interest rates? No, interest rates have actually gotten a little bit ahead of themselves and it's coming back down at this stage. Same with the 10-year. The 10-year has decreased to 1.75. And while we expect it to go back around to this level at some stage, it's not a market that is free falling just on that alone. IWM above the 200. Yes, IWM continuing to relatively rally here. Again, we cannot ignore this. And this is why we think we go into a sideways market. This is a Wyckoff distribution. If you have ever seen a Wyckoff distribution, that turns out to be a Wyckoff distribution. Dead cat bounce or rallies, especially to that 210 area, will most likely be met with selling demand. And this makes sense that we get a rally, some kind of selling, and potentially create some form of double bottom with a new low. Okay. If we think about SPX, we think about the falls in the past, not what we've seen in recent history. Let's go back over to the history of the past. We often get this kind of stabilization point. Sometimes we form new low and we get that extra sell-off and then we come back. Over here, stabilization point, we end up creating a new low, obviously at those wicks, and then we come back. This is the type of thing that you expect. Sell-off, rally, sideways crap, new low, max pain. Oh, yay, we're back into it. And that's where technical analysis will help us, because think about every one of these big sell-offs. What has generally happened? We're getting these bullish hammers coming off the last base with maximum pain concepts. A very easy longer-term, middle-term buy at this point here. While it does come back and give you even cheaper price, at this point here, you're making a very well-informed decision about gains in the market. And you go over, very similar over here. Nice big instability. Look at the instability. These are the signals that we're starting to form a bottom base. Okay, bottom base, bottom base, bottom base. Let's go over to current. Look, really crazy wick showing there's some interest. Oh, what's this? A really crazy wick. So do we expect lower at some point? It's very possible. However, this is the type of instability with wick purchasing that you expect to feed the base. Make sense? Amazon is up at the moment. Yep, 0.62. Holding the absolute line. It gapped underneath. It's trying to get back to the key support and close here. Another decent sign for the markets. Mark Wilkins says Feb equals chop. Certainly could be. Denial phase Bitcoin. Give Tom the triple thumbs up. I guess your name's kind of working, yeah? Are we in denial phase right now? Denial phase Bitcoin? Are we just sitting at crypto market saying, oh man? Mohammed says, what website is he using? Depends which one, but I used Forex Factory TradingView, which is this software here. Click the link in the description if you want to support us, if you end up buying one of their subscriptions. However, if you don't, it's free and you can use the free ones. Pretty good. I laughed so much then. You guys are funny. Denial phase Bitcoin. Yep, everyone says yes, yes, yes. Those comments are too funny, guys. I read the comment, drinked at the same time, and yeah, I spat it out a bit. Oh, man. Lucky I'm not in cab today. That was too funny. As soon as I said denial phase Bitcoin, every one of you is just like, yes, 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 yes. Where's the Bitcoin lovers? Come on. Poker denial. Am I in Polkadot denial phase? I probably am on Polkadot denial phase. Harsh Patel says, I accept defeat in my crypto account. Well, there's two ways to look at it. One, and I actually kind of suggest this, I think crypto is quite difficult to trade, okay? Because it's not a... how can I say it? It's not a manipulated market by a ton of algos yet, though they're probably in it. And it's hugely built on FOMO and FUD and all those types of things. So it's more of a basic kind of penny stock style trade. Now, we do like Bitcoin and Ethereum from a TA perspective, but remember the other coins, they tend not to trade that well. Some will disagree with me, but in general, when Bitcoin falls below, it smashes every other coin. When Bitcoin starts flying, the rest start to rotate. I think seasonality plays, data points, those types of things are a little bit stronger in the crypto phase than, say, like commodities or the rest of them. Gary says, I sold BTC at 66K, so I'm chilling at the moment. Man, you got the good price, bro. I didn't even sold them all at those price. I'm still hodling this crap. I've got stuff sitting around these prices now. And I've bought higher than this. There's no doubt I have. How can you think BTC is not algo traded as it is just digital crap, says Gog? No, it is algo traded, but not in the same way that you would see in the stock markets. It's just a little bit different. I mean, they're getting in there now. You can clearly tell, and the speed at which things are sold, and obviously there's less sophistication on the robots. It's more of a human play, and I think that when you want to trade, you've got to make a decision whether you like trading with some form of stat that you can kind of back up over a long time, which would be something like a stock market or a commodities market, or whether you want to trade on something that you may not have as much history in, which is something like the crypto market. It's much easier to trade the stock market, believe me. It is just easier. The hardest markets, in my opinion, to trade would be soft commodities. Let's see what you guys think. What do you think the hardest markets in the world to trade are? Tell me your hardest market. Which one? So I'm going to go with soft commodities as number one. Hideous market to trade. Then I'd probably go number two would be Forex/crypto. And crypto is not difficult from the aspect of just buying and hodling and buying the FOMO and those types of things. So that component makes it easier to obviously buy and hold FOMO. Forex is definitely a tough trade, but once you master it, you can do very well. And then I would go from there to commodities. And then I would go for number four would be probably bonds. And then I would go number five. Obviously, this is the easiest one. So that's the hardest one, would be obviously stocks. And then number six would be indices. And then even though it's not really a trade, number seven would be property. Okay. The reality is, while it's not a trade, it is quite easy. But you can make some massive stuff ups in this one. You can make some massive stuff ups. Does everyone agree with my list? That's my list of hardest trades to easiest trades. Spies green, yeah, 43.75. Look at this ridiculous dead cat. I mean, look at this stupid rally. I mean, it's not stupid because it's kind of what we expect, but at the same time, you know, that's a ridiculous switch. That is a 4.9% switch on the weekly in the first day of trade of the week coming into the announcement. And that's why in yesterday's video whenever I put it out, Saturday in the US and Sunday in Australia, that's why I said bear trap, because there's going to be all these people going super bearish and there's going to be stupid thing like this happening. It's exactly why we predicted that we would hit 4,300. Yes, I didn't predict to hit the lowest point here, but we predict that we hit 4,300 ahead of the Fed announcement and that we create some form of bear trap because it's common. And remember, we have 6 days of sell-off. Someone says here, where's the bonds thing? Lala 69, $5. Played Amazon 26.80 put and it went to 70 cents and now it's back down to 20. Some madness there. Russia is the market that's down. It's what a real correction looks like. Yeah. What is the Russian market called? I don't even know, actually. You learn something new every day. Russian stock market code. MOEX. Let's have a look at the MOEX, guys. The Moscow Exchange. Is this the actual one? All right. 34.71% top to bottom. Obviously, still much higher than it was, finding some form of buying pressure. Looks kind of similar, doesn't it? Except it was a few days ago. Doesn't that look similar to what we had just recently? The market overshoots, creates max pain. There's our support resistance. This is what you would expect. Hey, this kind of looks like what I would expect us to play out in the US. Let's have a look here. All right, so here's our bullish hammer. Oh, looks similar to today. And you get that little kind of dead cat rally bounce. Then we get that secondary low. Will this be the bottom of the Russian market? Interesting. This is the kind of thing that we expect possibly to play out in the US. And yes, it's based on, I've seen this quite a few times. RSX for the Russia ETF. All right, RSX, Vanek Russia ETF. Okay, this is based on a totally different market, you would think. That's not the Moscow Exchange. Yeah, that is a fall. Top to bottom right now is sitting at 37.16%. So there's a lot of markets within markets. Look at that. Oh, brutal. Stuart would say, I'd say FTSE 100 has held up nicely versus most others. Yep, that's correct. The reason why the FTSE has held up quite well, if we come over here to the FTSE and we look at the FTSE, is just remember what is in the index. And that's a pretty brutal day. But again, the reason why this is holding up is it's energy, finance, materials. Okay. Huge component of this index is that. Remember, the index that you're trading, please go check the top stocks in it. If you don't know that, like, some of the big tech stocks in the US make up like 25% of the S&P 500, then you really need to be going and having a look at this type of thing. Okay. Very important, because yeah, you need to know which index. If you trade the Australian index, understand the sectors that do well. It's value. These are the value. The whole market isn't crashing, guys. I'm telling you. It's not the whole market. It is an attack on growth stocks specifically. So the good news is we're getting that bounce. We expect now to potentially see some instability here around the Fed. Obviously, 4,300 was kind of the level I would hope we'd close at, just for easier buying experiences. But yeah, we expect this. The Fed will probably will create some form of certainty, but I'm not hoping for a V-shaped recovery. All right. Do not get that in your mind. That is not what I think is going to happen. I believe it's going to be some sideways crap here until the March period, the Feb kind of period, until we see the reality. And then hopefully then we form base and we get an amazing back end of the year. We've got Vasi Baidu, new member. Thank you so much for joining us. Thank you also to the 1,050 people we have here. That is amazing to see you guys coming out. Obviously, this volatility is getting everyone excited and everyone scared about the markets. So just to reiterate, 4,300 was reached. That was the level we thought. We do think that the Fed is going to give some clarity to the market. It is not in their best interest to crash the market. Remember that, guys. And while this is not necessarily the best signal of, oh, yes, I think this is the bottom, let's buy, because we don't have follow-through action just yet on these markets, we do need to remember when we look at the SPX, it's now a bullish hammer. If you see follow-through, yeah, that could mean some further movement up, but don't expect it just to be able to get through something like a 4,500 and just go, yeah, V-shape like last time. I doubt, in my personal opinion, we will ask the chat here that we see a V-shape. So let's actually put that to a vote. We'll get rid of the other vote. You guys voted 66% that the Fed, or we have just seen the low ahead of the Fed. So you guys all voted that. Thank you very much for voting for that poll. We'll end the poll there. And then we'll put another poll out and we'll see whether people think U-shape or V-shape recovery. So let's see what everyone thinks. Write this in. If we get I can't delete these other things. Okay. I'm just going to, here we go. We'll set it up and you guys can vote. So will we see a V-shaped recovery? Let's see what you guys think about that one. Again, thank you so much for everyone that's here. So yes, the markets have recovered. IWM looking a lot better. Do not forget that IWM will be probably the signal here coming into previous support, which will act as resistance should it be able to rally up to this stage. So this will coincide with many key levels on the S&P 500, and it's where we expect for dead cat bounce style trades like this to find selling pressure. We don't think it's over just yet in terms of generalized sell-off. Do we like the level we hit today? Absolutely. Why? It's because of a very simple, easy way to remember the markets, which is the 50 exponential moving average and the 20, the red line and the blue line. We hit the blue line. The blue line's a sweet investment level for a lot of people. They like that zone, and we have seen some growth. Now we move ahead to earnings, and nothing changes here, guys. It is all about the earnings. Can the big companies come through? Tesla, Microsoft, Intel, Apple, big names. These ones, after the close Tuesday, come and join us for the stream in the Tuesday close. Microsoft will be covering that and finding out what is going on, because this one here will probably give us clarity on the overall balance sheet. Chris Smith says Fed balance sheet QE runoff is what surprised the market. This news came out last Fed minutes and it was a surprise. This is what caused the market downturn. Bloomberg reporters and CNBC guests. Okay, thank you very much, Chris. Jay Nibble says, so now what now? Do you think this market's going back up? The market's so annoying. Yeah, for sure. When you get the volatility over 30, it's going to be like that. Even on a 5-minute chart, you don't seem to have a chance to get in. It just rips. It's a very unique day in terms of its rip. And yeah, it can be very, very tough. This is an algo driven buy after hitting an extreme low, and it's incredibly fast. Whatever lol says that FX Evolution, take a look at the SPY November 2007. The charts are so similar, you won't believe it. All right, let's have a look here. So if we go over to the SPY, type that in. So obviously S&P 500, just the ETF. And if we go to the weekly, let's have a quick look and do some investigative work on the 2007 chart. So what he is saying is that this is the scenario. So obviously bullish action. Basically, you're saying, I assume that we are here. So that we are at a 50 exponential moving average. We have dumped. We have come back to a previous support. And we have rallied. And you're expecting a new high. And then obviously the end of Armageddon. Look, yeah, I can see your reality in terms of how this looks. And it looks kind of similar. But we can find many similarities in charts. The question is, do we want to use them in our analysis? And I think that I don't even know what I just did then. So we'll get rid of that. I just pulled on something and turned it into another one. I think that it's a slightly different scenario. We're not necessarily seeing the cracks that we were seeing then just yet. But yeah, I mean, it's an interesting one for sure. Edwin says, ooh, the QQQ is going positive. Amazing. Yeah, it's pretty amazing. It's a big switch, guys. That's a huge rally off the bottom. Dead cat bounce is definitely going to be the name of today's thumbnail. Yep. Gary saying, he says, history doesn't repeat itself. It often rhymes. That's correct. And Tom, have you looked at BTC since the rally? I haven't looked at BTC just yet. So we'll do that in just a second. We're coming in 11 minutes to the close. I think this is a pretty cool reality that we've seen the rally here. That's nice. It's good. It's ahead of the Fed. Monday was packed with action. And if you look at these, it's all the growth stocks and hyper growth stocks. They're often in our watch list. So in general, a lot of these were super negative. I mean, one of my favorites, Net. Oh, yeah. I mean, that's coming into a very cool support. And look at that. Look at the rally here. That is a 17.62% rally switch. Whoa. Shops had a very similar one. That's a big rally switch, guys. Damn, that's big. That's actually that's almost one of those ones that you'd think is so rare. I mean, they have not. I mean, you were seeing big days out of this stock, but damn, that's a big rally switch. So big rally switches across my favorite cybersecurity area. I do like this. Much fairer price on something like a net now. This was stupid ripoff here. Okay, I can see that. You're getting price back at the start of actually the end of 2020. So the market is giving us some prices here on some quality stocks at good levels. Amazon, another one that's holding the support, a good sign for the market's now up 1% almost. You can see here the crazy support and the crazy switch here. Let's just get the percentages out for that. Dead cat bounce, Central 6.8%. Google, flat, but was down huge. Apple, 160 after hitting a 155. Oh, not quite the 152.97 that we were hoping, hey? All right, fair enough. And then, of course, Tesla hits our only last support, the trend line. The trend line gets hit at I mean, I have not changed this, but you want to talk about insanity. Look at this. Let me just zoom that in. Look at our trend line, guys, our community trend line. We all did this together. Oh my goodness. Look at it doesn't get better than that, does it? Is that like pinpointed madness or what? BTC broke out. All right, we'll move over to that in a second. So 9 minutes. Don't get so crazy hyped either. Yes, we're positive the market. Yes, this rally looks amazing. But at the same time, wait, the Fed's going to come out. The Fed's going to say some stuff and give clarity. Investors should have always been pretty comfortable around that level there, okay? If they have long-term plans. And a lot of this comes down to something we'll be talking about in the markets in the video recap today. Please subscribe if you're interested in this. We're talking about those fundamentals not necessarily looking bad for the overall large stocks, the Apple, the Microsoft, the Googles, all of these still holding strong. And that's why we're not negative on the market at this stage. We're confident in the middle to long term at this stage, but we are obviously day by day in terms of these rallies. Do not get caught up in dead cat bounce kind of crap, though. If you're feeling FOMO all of a sudden, be careful, guys. I mean, obviously, you need to make your own decision, but let's think about this ridiculous big bounce, and let's go back to other ridiculous big bounces in the past. Okay? So here's some big bounces. We'll go to the SPX to get rid of the futures. So we can just see the reality of these big bounces and how often they do come down for seconds. So there's a big bounce, did come back for seconds there. So you get that kind of initial hit and then it comes back. You get big bounce. You often get a second chance at it. Obviously, you got much more than a second chance there. And we scroll through history and there's quite a lot of times where we get another shot at these rallies. So remember, this type of rally, while it is extreme, I mean, this is an extreme rally as well. That is a 4% switch rally, can often be met by a little bit of an extra sell-off. And I think we need to remember that we don't have to be a FOMO. Laurie says, profit secured. Now I wait for my heart to stop pounding. Well done, Laurie. I mean, obviously I know you quite well, so I'm glad that you've done all right today. But the fact you even were heart pounding probably means that you took some risks, sir. Mm-hmm. Darth Vader says there's always opportunities. That is correct, Darth Vader. It's a great point. There's always another opportunity. All right, let's go through some markets. We've already seen the stock market here is rallying hard into the close. Fantastic stuff. Coming back, dead cat bounce kind of action. We'll find out whether the Fed can really secure this. Microsoft, again, earnings announcement tomorrow. Let's go through some stocks and stuff. Just quickly as well, remember the US 10-year is actually come down, and this is why it's not necessarily all about these interest rates. These two, the 2-year and the 10-year, are down. Let's go to gold. So gold 1841 still looks really good. I still like gold. I know everyone hates it and they've forgotten about gold, but I personally believe, this is just my own opinion, that gold has broken the 1830, and I like that level. I like this conservative pullback, and I'm hoping for some 1870 action. Now, I might be a little bit insane because I've traded gold on and off over the years, and I tend to believe in certain areas. But remember, the difference between a trader in gold and silver is that they trade it. An investor in gold and silver, yes, you can make the argument, it's a very valid argument, that gold has underperformed over other asset classes. So just remember that there is a cyclical kind of thing that goes on with these. So we've seen a triple bounce off the lows here. We've got obviously long leg doji on 2 hour. We've seen rejections off the 1830. Each one has been met by buyer demand. And the next stop, if it continues to go through this peak here, is pretty much 1870. So good luck for the people there. Silver not faring so well. Hit the resistance and come back down. Yeah, it's kind of like floating all over the place. Oil, got a few questions about that. Highly volatile here. I don't like trading oil at this stage. My favorite oil trade was up until the 85, and I liked it to here as well. And we documented that a lot on the channel. We've been pretty good at oil. This is a time I would stay clear of this particular chart just because of the huge volatility both ways. It's up to you, whatever you want to do. But let's just go to the 4 hour here and have a look. 4 minutes till the market closes here, by the way. So not too long now. Look, the good news is you've based. You've created a max pain. And for oil traders, you're probably just looking for a follow through here with a relatively tight stop. So basically you're saying, yes, we've created a nice support. We've hit a low, obviously volume related to the market today. You're looking for a follow through off the high. So you're probably going into something like a 1 hour chart and looking for it as well. And when you get that kind of rally, you could be potentially looking at a further push up in oil. I'm not detrimental on oil over the middle term here. I think oil could easily hit 100 a barrel in what I think is going into a bit of a super cycle for some commodities here. But yeah, it's tough. It's all over the place. It clearly has lots of wick rejections both ways. Very, very tough market. DXY continuing just to kind of hold this area. Previous support becoming support again, moving up here ahead of the Fed. We'll find out whether it does anything. And let's just quickly move over to the crypto markets. 37,400. Bitcoin goes as low as 33K or just under 33K today, and then fully rip rallies up similar to the market. It's in tandem with the Nasdaq, you would think at this stage, doing some big stuff. Good closure here once it occurs. So back above 36. Next stop, 40K, question mark, probably. And then we find out whether the bulls can rip rally this Bitcoin market. So it's across the board, a nice rally here. I'm glad that as a community, we were correctly figuring out that this was probably going to be a bear trap. Whew. Crazy 24 hours. Wow. Holy moly, that was nuts. Great to hear, Laurie. Very happy you love the community. Kunal says, whoa, my portfolio is almost turning positive. Nice. Almost, but hopefully very soon. Edwin says gold stores value very stable. I do not agree with that, Edwin. If I thought gold was stable, then I don't think it's stable. And I'll explain to you why very, very, very easily. This. Okay. I've been around the markets for a while. This was absolute crap when it happened. I remember it. I also very much remember this day here. I know it's the monthly chart, but when it fell through that floor, it got obliterated. And then it continued to weaken all the way down to around that 1,050. So look, gold is a store value, sure. But to say it's not volatile, it is volatile. And it can really punish you. I mean, this is still a top to bottom fall of 45%. So just remember, this was while the stock market was rising. Be careful there, thinking that gold isn't volatile. Look at the left-hand side, understand it, and hopefully we can make better informed decisions. NDX is selling off. Yeah. Well, I don't expect it just to rip the whole way, guys. But I wouldn't say that that's necessarily selling off. There will be some profit taking here, though, into the close. You'd think the futures will go probably red after it closes. I mean, if you have a switch and you manage to pick the bottoms, or you manage to get in even through this last couple, a little bit of rally, I mean, it's like almost a 15-minute inverse head and shoulders here, isn't it? Then why wouldn't some traders be taking some profits today? Scott Morgan, oh my God, that candle DKNG makes me want to go grab my wife. Yeah, I saw that one before, man. Where's DKNG? Hello, 2.93. So an actual bullish change. Again, another bullish wick kind of hammery style candle. Harsh Patel says, Tom, I want to thank you for helping us all stay calm and make things of the market moves through these times. They certainly have been tough for a lot of people. I know that. Looking forward to this year and many more to come. Appreciate it, man. I appreciate the support. We're definitely going to push for 100K this year as a community. So, yeah, we are super excited to do it. We're super excited to push to that next level. PK Sub and says, my portfolio is still down plus 30%. Oh, sorry to hear that, PK. I assume there's a few growth stocks in that one for sure. Tesla trying to end the day green. What a day. Yeah, so let's move over here. Tesla 930 again hits our crazy trend line and bounces back up above. So it's all going to come down to Microsoft and earnings. It's all going to come down to Tesla and, of course, the Fed on Wednesday. Expect the Tuesday session to probably be some instability. I don't know if we'll rally continuously. I don't feel like we will, but that's a complete guess. The only thing that was most likely assured is that when 4,300 was reached on the S&P 500, we would see a bear trap. And it seems to be that is what has happened today. Now, it went lower, I admit. I didn't know it was going to go lower than 4,300, but that was where we expected the bear trap to be set. And this is the nasty part of Wall Street. Remember, dead cat bounce rallies are often met by further selling in these unstable times and markets. And it's not like the VIX has dropped that much, but that's exactly the sign we did want to see from the VIX, which is a huge amount. And you know what's going to be interesting when this closes? Look at the PCC. I bet you there's been tons and tons and tons of puts being put into the market today, and obviously calls near their end. So, yeah. Market's closed. We'll quickly go over here to Bitcoin. Bitcoin's again rally above 36 is a big deal. Let's get the 36 closed. Nice bullish hammer here. 40K would be the next stop, 40.70 or 40K in general. I hope it can rally into that level. We'll watch the close. If you're thinking of potentially trading it, you also want to see new highs being formed once the daily's closed, and that will show you momentum into that direction. Be careful of the Nasdaq as well for Bitcoin traders, and Ethereum. Not as good a rally as Bitcoin, but that's to be expected. Bitcoin goes first, Ethereum goes second, alts go third, and crap coins go last, as we know. So the big alts, the Ethereums, the Bitcoins. Bitcoin still leads the way. It's the index. This is like the Nasdaq. So here's our SPX, which is Bitcoin. Here's our NDX, which is Nasdaq. Here's our IWM. And what are we going to call the crap alts? Trash bonds. I don't know what to call them. But yeah, basically the indices kind of look like that if you were to compare them on crypto. Jay Nibble says, since every big announcement event tends to bring us back to a resistance or a support, that can also happen. The day before, what's the likelihood you would put on the index coming back to resistance tomorrow? Fairly. I mean, I would just think the 200, That's probably about the best level we have. I mean, you've just hit some key levels. Daily 20s quite far behind, which also was a signal why we thought could see this rally, 6 days in a row sell-off. It's very tough. I would rather be reactive than predictive here after such a big rally. The only thing we could really say is that 4,300 was going to be a buy rip. That's the only thing that we could say coming into this week. At this point, we must wait for the news. We have to. What can you do? How can you predict exactly what the Fed's going to do and exactly what Microsoft's going to report? We're in volatile times with the VIX above 30. You've got to only look at the bigger picture. It's hard to look at the small picture. Crap coins equals GME and AMC. The Russell 5000, fair enough. Is the correction over, Tom, says PK Subban? I'm not convinced of that. I've said it a few times now. I think it's going to be like this, then back down, maybe some max pain, and then movement forward. But more importantly, let's see what the community thinks. We put a vote out there just before. Let's see what everyone thinks. Go over to this list. Thank you for the new members as well that have come in. So people said, will there be a V-shaped recovery? No was 72%. So thank you so much for voting in the poll. No, 72% to V-shaped recovery. Very interesting compared to where we've been in the past. And we've got Scott Morgan, $5. Is it possible for thank you very much, Scott, as always. Is it possible the market helped the Fed fight inflation the past few weeks? Maybe rate hikes will be 1 or 2. Does that make the markets, and now the markets are fearful? Hey, dude, I think you're thinking outside the square there. And if the market remains kind of stabilized or low, I kind of agree with you, man. A lot of sentiment is driven, or a lot of inflationary concepts are sometimes driven by demand. Now, that's what we've seen spike here. People have been buying cars. People have been buying this and that. There is a potential that some people look at their 401k, they look at their wealth and they say, whoa, 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 I have a little bit less now. I don't want to buy as much. Now, that can have obviously a reoccurring effect, but yeah, that is certainly something that could be there. It would have to be sustained more than a few weeks, though, you would think. Bradley B, $4.99. Thank you so much. Feeling a bull trap is going into earnings. Great trades both ways on SPY, QQQ, either way. Yeah, so we go from the bear trap of the last session into a potential bull trap dead cat bounce. Certainly, I'll be putting out a video very soon about it. Look, guys, we started early. Thank you so much, Bradley B. Thank you so much to Scott and everybody else that has subscribed, supported the channel, and done everything that with the community. I appreciate that very much. I'll read a few more here. Anthony says, do you think that was a dead cat bounce? Yeah, most likely. And Dancho says, I feel we might have hit the bottom and they just realized hodlers are not going to sell. Oh, believe me, they got margin through so hard today, man. By pushing through that 4,300 and creating 17% switches in certain hyper stocks to 20% switches, they've really done a number on many people that were margined. I would say people got destroyed today, Dancho, unfortunately. And I feel bad for people that are out there. They just might pump the price since smart money don't have anything better to do, potentially there. And we've got Travin McDuff 12 becoming a new member. Thank you so much, Travin. Appreciate that. Welcome to the community. We appreciate it. All right, everyone. Thank you so much for joining us today. We hope you enjoyed the stream. We hope you found some value in it. If you did, please remember to subscribe, smash that like button, and we'll see you for the next stream, which will be on tomorrow. And then we'll have to have an announcement. For anyone that knows, we'll be doing the stream tomorrow. I'll see if I can, but Thursday and Friday here in Australia, so that's Wednesday and Thursday close, I may not be able to run them. I'll try to run. I'll be away for a couple of days and I'll be back on the weekend. I will try to run the day after the Fed from my laptop and I'll come on, okay, for a little bit. I'll see if I can get that done. I will make the announcement before, but I will be gone for a couple of days at the end of this week and then back and we'll resume fully. So apologize for that, but sometimes you've got to do what you've got to do. So I'll do my best. I won't be putting a video out those days other than I think after this Fed announcement, I have to come out with something. So I'll be looking at the market. Market never sleeps. But yeah, tomorrow we're on and then I'll create the videos when I can. And then, of course, the weekend video will be there. So good luck out there this week, guys. It's going to be a day by day by day thing. Remember, the VIX is high. That means you've got to be nimble. You've got to be fast. And it's going to be a little bit crazy out there. Sprocket also coming in here. SP Rocket, sorry. New member. Thank you so much, SP Rocket. Appreciate it. Thank you everyone very much, everyone. And Emma K, $2. Thanks for everything, Tom. No worries, MK. Thank you again. I enjoyed the course. Great. That's fantastic. And if anyone's interested in the February mentoring stuff we're doing, I think it's life-changing. It's basically the culmination of my 12 years worth of sitting here, spending thousands of hours in front of the charts. You're more than welcome to jump on over to fxevolution.com or message me in Discord. and I'll let you know about it. But yeah, all right. Thank you so much, everybody. Bye for now. Good luck. And never feel the FOMO or the fear, guys. Always be looking at things logically as much as we can. Bye for now.